what is an acceptable drawdown for your trading strategy? Now, in this video, I'm going to talk about how you can kind of use statistics to predict and project what is an acceptable form of drawdown for your trading strategy. Now, to do this, you only need two things, okay? So these two things is actually highlighted here, the green boxes, okay? You need to know how much you're risking, which is easily determined, by yourself, right? You just calculate how much you want to risk per trade and you adopt the right position size whenever you trade. So let's say you are buying a euro dollar and you have a stop loss of 30 pips, then you calculate what's the position size for 30 pips stop loss, okay? If you are, buying a Kiwi dollar and your stop loss is 60 pips, then you adjust your position size according to 60 pips, right? If you do not know how to do that, I have a video about that. Okay, I even have a lot size calculator tutorial and the indicator. Just check that video out. Okay, but in this video, I'm going to assume that you know how to calculate your position size and you know how to risk the same percentage per trade. Okay, that's very important because you don't want to be risking, 5% per trade, 2% another trade, 1% the other trade. Okay, you want to keep this percentage fixed. Okay, so for this example, I'm going to assume that you are a bit more aggressive and you are risking 3% per trade. Okay, that means that if you put in $1,000, let's say your account has $1,000, then 3% is $30. Means each trade you are risking $30. If you are wrong, you lose $30. Okay, that's straightforward. Now, the other factor that you need is you need to know your win rate. Okay, your win rate is actually very easy to determine. Okay, if you are not already recording your trading journal, you want to make sure that you record your trading journal. Okay, if you haven't, the easy way to get your win rate is actually to pull out your brokerage statement. Okay, it will tell you your probability of winning, and you just want to plug that number and you put it in here. Okay, so for this example, let's assume that you have a 60% win rate. Okay. So before I go on, I want to explain to you why it's so important to use this calculator, why you need to understand this calculator and how it helps you in your trading psychology, okay? Losses are part of trading. You should already know that, okay? There's no such thing as 100% win, okay? In fact, I have a challenge for you, right? I want you to try to lose 100% of the time, okay? If you can lose 100% of the time, then I'll be willing to fund my own money into your account, okay? If you can lose 100% of the time. Okay, but chances are, okay, not really chances are, but it's a fact that you will not be able to lose 100% of the time. Okay, so if you cannot lose 100% of the time, what makes you think you can win 100% of the time? Okay, you're not being realistic, right? So this calculator will show you what is realistic based on your risk and your win rate. Okay, so it will kind of tame your psychology. It will cycle you that okay, a series of losses is normal, and at what point, right? At what point, how many consecutive losses in a row it's to be expected? When I trade, right? When you understand this, right, you will be more, you'll be more careful in your risk management, right? And you also would not have unrealistic expectations about trading, okay? If you get 4 losses in a row, or if, let's say, our signals have 4 losses in a row, you're not going to freak out because you know that, okay, statistically, this is acceptable, right? This will happen, right? This is just part of trading, okay? This is in line with my statistics calculator. I did my prediction. It's normal. I accept the risk, and I'm going to follow it, okay? So let's talk about the crux of today's video. So it's very easy. You put in the percentage and the win rate over here. Okay, this entire Excel has a formula input already, but I just want you to focus on this entire table over here. Okay, so the way you read it is losses in row, meaning that you have 1 loss in a row, you have 2 consecutive losses, you have 3 consecutive losses, 4 consecutive losses, and so on. Means that you buy, and you lose. That's consecutive losses. So if you have 5 consecutive losses, means that the previous 5 trades that you took were losses. Okay, it's pretty straightforward. Your max DD means your maximum drawdown. So if you are risking 3%, then of course 3%, then your first trade, your account will be down 3%. Now, your second trade, your account will not be down 6% because when your equity drops and you are risking the fixed percent, which is 3% of your account, your position size will drop. That's why you realize that your maximum drawdown doesn't go from 3 to 6 to 9. It's a bit lesser, right? Because each time you lose money, your accounts grow smaller. And when your account is smaller, your position size will be smaller. Okay, so this is also very good to kind of be on the defensive when you are not trading well, it slowly cut back your position size, right? Your equity will drop, so your position size will drop. Okay, so you can see 3%, 5.9, 8.7, 11.47, and so on and so forth. Okay, so this one, nothing much to say, but here's where I want you to focus on. This portion is very important. Okay, so what does the probability of it occurring mean? That means what's the likelihood of you experiencing this instance, right? What's the probability of you losing one time, right? Having a single loss. That's 40%. It's pretty straightforward, because if your win rate is 60%, that means that your probability of losing is 40%, right? Straightforward. But how about two trades? Okay, means two consecutive losses. You can see that it's not a simple math, in a sense that it's not just times 2 or divide by 2. There is a calculation. Okay, you can see the formula here. Okay, now this is not a statistics class, so I'm not going to go into a formula, but I want you to just understand that if you look at all these numbers, 16% is a very high probability of you having two consecutive losses. 6.42, 1, 0.4, 0.16, 0.06. Okay, so what does this mean? It means that if we just use, for example, 1% probability of happening, which is a pretty common, 1% is like out of every 100 times, one time this will happen. Okay, means you have 5 consecutive losses. Okay, so if you know that, okay, it's very normal for me to experience up to 5%, because I think a good form of reference would be 1% probability of occurrence, means that you look for a series of trades whenever you have a consecutive losses up to 1%. You use this as a threshold. I think this is a good threshold. Okay, it's not based on any statistics. It's just based on a number that I like. I like to think that out of 100 times, if one time it happens, which is 1%, I think it's a fair number. Okay, so if you see that 5, right? You see over here, based on this percent and this win rate, you have 1% over here. Then you should naturally expect that hey, look, my strategy can have a 5% consecutive loss. Okay, it's normal. I expect it. Okay, it's not shocking anymore. You shouldn't be shocked that, oh, why is it that I have 5 losses in a row? Am I doing something wrong? Because this is within the parameters of the trading system, right? You can see it over here. It gives you a very good guidance that, okay, if I have 5 losses, it's not a big deal. Okay, but it also tells me that after 5 losses, if the streak keeps carrying on, in this case it keeps carrying on, okay, then I want to be careful. I want to observe and say, hey, something seems to be wrong. This shouldn't be happening. Why am I having 6 losses in a row? Why am I having 7 losses in a row? Why am I having 8 losses? That's when you want to start, like scrutinizing your strategy. Did I change something? Did the market condition change? Right? That's when you want to start evaluating. Okay. Again, this is just a rule of thumb, right? Look for the 1%. Right, probability of it occurring 1%, or about 1 in about 100. In this case, is 97.66. Okay, because you shouldn't you shouldn't have the probability of occurring be so big, in a sense that you shouldn't, just because of 2 consecutive trades losses when it's pretty expected, and then you say this trading strategy doesn't work, this signal provider doesn't work. Okay, that's not the way to do it. You want to take your emotions out of the equation. You want to look at the statistics, and you want to make a good informed decision about whether something is working for you or something is not working for you. Okay, so in this case, you'll focus here. Okay, so before I end off, I also want to play with the numbers. Okay, let's simulate, because a 60% win rate for most people, it's not achievable, because most people are not that accurate. Okay, our hit rate for our signal is about 65%. Okay, but let's say you are new and your win rate is 33%, right? 33%, and yes, you still can make money with 33% if your risk to reward. If your reward to risk is high, meaning that for every dollar you put in, you make more than $1, right? You need to have high risk to reward. Okay, so that's also a lesson on its own, right? To always look for the always make sure that you maximize your reward and minimize your risk. Okay, so if you have a win rate of just 33%, which is pretty low to be honest, but it's pretty normal for new traders, right? Then you could see that, somewhere around here, 11 consecutive trades, then you get probability of occurrence is 1.22, right, on the 11th trade. So what does this mean? This means that you should expect to have 11 trades of consecutive losers. I mean, that sounds tough to manage psychologically because imagine trade after trade, you keep losing money. But this is just the reality of the statistics, right? The statistics says that it's very probable, right? It's very probable for you. Even look at the 6 consecutive loss, there's almost a 10% chance that your strategy will result in a loss, right? So you want to make sure that you use this calculator. You want to make sure that you tame your psychology. You want to adjust your expectations. You don't want to expect that everything is 100% win. In fact, earlier on this video, I talked about how you can't even lose 100% of the time, right? So in this case, you want to look at this, input your own numbers, okay? For us, as I said, it's about 65%, okay? So for us, if you are using our signals, then ideally you shouldn't want to see more than about 4 consecutive trades of losses. Okay, this is just a very rough guide. So if you start to see that our trades have 5, 6, 7, 8 consecutive loss, then you might want to evaluate our signals whether it's right for you. Okay, and so one more thing to note is that sometimes in our signals we cut our trades fast, means we cut our losses very fast. So what happens is that the win rate might go down, but the actual loss in terms of percentage, the drawdown is very little because we see that we are wrong, we cut it fast. And that's also key to trading, the ability to cut your losses fast when you are wrong. Okay, but if you are new, I don't want to confuse you, right? You just use this as a general guide that say, look, okay, my hit rate is X amount, I put it in here. My hit rate is 33%, and I can expect to have 11 consecutive loss. And because I can expect to have 11 consecutive loss, I'm not going to be stupid. I'm not going to risk my entire account on a single trade, because I know that in the long run, I'm going to encounter a series of losses, and I want to be in the game. So I will not risk my trading account, my entire trading account, for one trade. I will not even risk 10% of my account for one trade, because I know that 10 consecutive trades is a probability, and if I risk 10% per trade, I can wipe out my account. Okay, so that's how you use it, and that's how you train your psychology. Okay, so I think I'll put this spreadsheet in a Google Drive, and I'll leave the download link in the description as well, so that you can download it. Okay, in the description, I also have a free day trading guide for you. If you are new to our channel, make sure you download that free trading guide. It'll get you started. It's a strategy that we use, but I'm not saying that it will work for you, because of course, it requires experience and everything else. I cannot guarantee your success, but it is a good place to start. Okay, so make sure you download that. Hit the subscribe button. If you have any questions, just leave a comment below, and I'll do my best to address it. Okay, if not, I'll see you in the next video.